Before the dollar became the king of currencies, the British pound sat on that throne for more than a century. The whole world hoarded British bonds just like they're clutching U.S. treasuries today. And then that crown had to pass to someone else. Imagine that for 300 years there has always been a single throne reserved for one currency. It's the currency big contracts are written in, the one merchant fleets calculate every voyage with, the one central banks around the world hold as their ultimate safe asset. And every time an empire sits on that throne for too long, almost the same sequence plays out. It borrows a bit more, spends a bit more, funds one more war, one more social program, until the very money that built its power starts turning against it. History has run this loop many times. Today, everyone talks about the US dollar. But before the dollar rose to the center of the global financial system, there was another king of money, the British pound. In the 19th century, if you were a merchant in India, a ship owner off Africa, or a banker in New York, you had to think in pounds. It was like the default operating system of the world economy. And the scary part is this: the path the pound took from absolute dominance to eventual dethroning looks a lot like what you see around you today, just with different names. The pound once dominated global trade. British government bonds were considered the safest assets. After the World Wars, public debt soared above 200% of GDP. There were two big devaluations, and by 1976, an empire that had once painted half the map red had to knock on the door of the International Monetary Fund for help. If you want to understand the future of your own wallet, your savings accounts, your retirement money sitting inside a system built around the dollar, you need to look at the slow death of the British pound. Because this story isn't just history, it's like an early draft written in advance for what can happen to any reserve currency, including the one you use every day. This is the story of how the pound, the money of the greatest empire of the 19th century, borrowed, spent, and ultimately lost its monetary throne. First, let's clarify a concept that sounds complicated but is actually very down to earth: reserve currency. Forget the thick economics textbooks. Think of it simply as the currency most of the world is forced to use to trade with each other, to hold as safe reserves in central bank vaults, and to price major contracts, from oil purchases to debt repayments. When your money is chosen as a reserve currency, you gain enormous privilege. You can borrow more cheaply, issue more debt that the world still willingly holds, and use your currency to buy real assets from other countries. In the 19th century, Britain was the workshop of the world. It led the Industrial Revolution. Its ships controlled the sea lanes. Its navy was unmatched. The pound was pegged to gold, giving an aura of absolute stability. 1 unit of pound could be exchanged for a specific amount of gold. You could move from paper to metal and back, and trust that the value held. When real industrial, commercial, and military strength stands behind a currency, trust is near total. The British grew up believing that this was permanent, and so did much of the world. But there's a seductive logic that comes with power. When you are strong, you want to stay strong. To maintain that strength, you must defend colonies, finance wars, build fleets, and soothe domestic unrest with welfare programs. Each decision taken in isolation looks reasonable. Britain borrowed to fight its rivals, protect shipping routes, and maintain a vast imperial system. The problem wasn't one loan or one war, it was the long-term trajectory. Economic growth gradually slowed, but spending and long-term commitments did not. Like any reserve currency, the pound was pulled into a contradiction. To keep its central role, the empire had to spend more and more, but that very spending eroded the real economic foundation underneath. When the 2 world wars arrived, Britain leaned hard on its monetary privilege and credit reputation, borrowing massive amounts from abroad, especially the rising United States. When the guns finally went silent, Britain stood in the camp of the winners, but in financial terms, it was exhausted. An empire that won the war looked on its balance sheet like a family that had mortgaged everything just to keep the house. Let's go back to the peak of the pound. In the 19th century, Britain was called the workshop of the world. British goods were everywhere: machines, textiles, steel. London wasn't just a city, it was the financial center of the planet. Banks there lent to governments and companies across the globe. Capital flows through London like blood through arteries. When you talked about safe money, you meant British government bonds. When you signed contracts, many of them were denominated in pounds. The pound was on the gold standard. The exchange rate was stable. That created a deep sense of certainty. You could plan long-term, save, lend, invest without fearing that someone would just print your savings away. That confidence was the foundation of the empire. British citizens grew up with the feeling, this is the center of the world. Our money is the standard for everything. Sound familiar if you think about how many people in America feel about the dollar today? Then came World War I, a long, grinding conflict that devoured resources, money, and people on a scale Europe had never seen. Britain had to finance the war effort not for months, but for years. To do that, it borrowed heavily, selling overseas assets, issuing bonds, tapping banks, especially in the United States, whose industrial and financial power was rapidly rising. When the war ended, Britain was on the winning side. But behind the parades and speeches, a cold reality sat in the ledgers. The state was buried in debt, and the financial system was stretched thin. In that setting, British leaders wanted to signal that everything is still fine, we are still at the center. In 1925, they decided to return to the gold standard at the pre-war exchange rate. Psychologically, it was a declaration. The pound is as strong as ever. We are still the world's benchmark. But there was a serious problem. Post-war Britain's real economy was not what it had been before the conflict. Industry was damaged. Competition from the US and other countries had intensified. Productivity was no longer as dominant as in the 19th century. Keeping the pound at an overvalued exchange rate relative to the true strength of the economy made British goods expensive. Exports struggled, unemployment rose, workers felt the pressure. It was like a once rich person whose income has fallen, but who insists on maintaining the same old lifestyle, fine dining, luxury cars, costly vacations. The gap between image and reality began to eat away from the inside. By 1931, the pressure was too great. Capital was fleeing Britain. Investors were losing faith that the pound could hold its old parity. The government could not defend its gold commitment forever. Eventually, Britain was forced to abandon the gold standard. This was a psychological shock. For the first time, the world clearly saw that the pound was no longer untouchable. Absolute trust had cracked. The pound was still a major currency, but the halo of being the unquestioned gold anchor had shattered. Then came World War II, an even more expensive war. Once again, Britain borrowed heavily to fight, but its financial position was much weaker than before WWI. When the war ended, the map had changed, but the balance sheet had deteriorated further. Public debt surged above 200% of GDP, infrastructure was damaged, and colonies were pushing for independence. Britain had won the war but lost on the books. In 1944, before the war even officially ended, but with the outcome nearly certain, the major powers met at Bretton Woods to redesign the global monetary system. The U.S., with the largest gold reserves and the strongest economy, stood at the center. A new system was created. The U.S. dollar was pegged to gold, and other currencies, including the pound, were pegged to the dollar. On paper, the pound remained important. In practice, though, the monetary throne had shifted to the dollar. Britain had gone from writing the rules to playing inside rules written by someone else. After the war, Britain faced a series of public admissions. In 1949, it sharply devalued the pound against the dollar, acknowledging that its old strength was gone. In 1956, the Suez Crisis became a symbolic humiliation. Britain, France, and Israel moved to seize control of the Suez Canal, but the U.S. applied financial pressure, threatened to sell pounds, and refused support. Britain had to back down. It wasn't just a military setback. It was a brutal reminder of how dependent British political and monetary power had become on American decisions. In 1967, another major devaluation. Each time, the world looked at the pound and understood a little more. This was no longer the absolute pillar of the system. Step by step, the pound's role at the core of global reserves shrank. Britain remained a developed economy. London remained a key financial hub, but the money king throne now belonged to the dollar. The climax of this status shift came in 1976, when Britain had to seek assistance from the IMF. This was symbolically deep. The country that once helped shape the post-war financial order now had to accept tight conditions set by others. The government cut spending, tightened policy, and adjusted its budget to secure the bailout. The pound, in some sense, remained strong for British citizens. But inside the global system, it had clearly moved down a tier, or several. If you zoom out on the whole journey, you see a repeating pattern. First comes real dominance, true industrial, commercial, and military strength. The currency is backed by real output and assets, and it's anchored to something hard like gold. Trust is absolute. Then comes expansion and war financed by debt. The empire funds wars, welfare, and global commitments with cheap borrowing. Next, real strength fades, but the image is maintained. Growth slows, competitors rise. But the old center still wants its currency to be as strong and prestigious as before, even if the economy can't justify it. Then you get the first moments of public admission, leaving gold, devaluations, systemic changes. Each decision sends the same subtle message to the world. Maybe this is no longer the one true standard. After that, a new order is built without you at the center. New conferences, new systems, new clearing mechanisms in which your role is smaller. Then come the humiliating financial episodes. Repeat devaluations, going to international institutions for help, letting others read and judge your books. Finally, the currency stabilizes at a lower status, still important, but no longer the axis everything else spins around. What's striking is that at each stage, people living through it often believe, we're different. The British in the 19th century could not imagine having to negotiate with the IMF. They could not picture another currency fully replacing the pound at the global center. But the arithmetic of debt, interest, and real economic strength doesn't care about feelings. When you pile debt on debt to sustain an imperial lifestyle, when you borrow to pay interest, when you spend more than your economy can sustainably produce, then whether you are Britain, Spain, or anyone else, the decline model runs toward the same endpoint. You lose your privilege. Viewed through this model, the pound's path is easy to mark stage by stage. Real dominance? Yes. Expansion and war funded by debt? Yes. Weakening fundamentals but clinging to the old image? Yes. Breakpoints like leaving gold, devaluations, Bretton Woods? Yes. A new system centered on a different currency? Yes. Going to international institutions for help? Yes. Settling into a lower-tier role, a second-tier great power with an important but not central currency? Yes. Now, when people talk about the US dollar, about public debt, faraway wars, stimulus packages, and a world forced to hold US treasuries in its vaults, many find it hard to imagine a similar end. But if you strip out country names and currency labels and look only at the pattern, a great power uses its financial strength to fund wars, lifestyle, and promises beyond what growth can support. Then the pound story is no longer just British history. It becomes a mirror. The British once believed their empire was eternal. Many Americans today assume their system is irreplaceable. But monetary history is cold. It doesn't ask whether you believe in your exceptionalism. It only asks, is real growth still enough to carry the weight of debt, interest, and promises? Does the world's confidence in your currency still match your real strength? If the honest answer gradually becomes no, then the next chapters of the story have already been outlined. The important question for you isn't, can the dollar lose its throne? History has shown that any currency can. The real question is, if a previous reserve currency went all the way from global dominance to knocking on the IMF's door, and if the dollar is walking a similar path, where will you be in your own life when that shift happens? Do you have 30 working years ahead of you, or only 5 years before retirement? Is most of your wealth trapped in a system tied completely to a single currency? Or have you started quietly preparing for the day it might no longer be at the center? This video isn't trying to give you personal financial advice. It's simply pointing to a story that has already played out, completely with visible data and consequences, so that you can ask yourself honestly, if history doesn't repeat detail for detail but does repeat in structure, where do I want to be standing when it does? If you think those questions are worth your time, stay with this series, because the British pound is just one episode in a long saga about currencies that once held the world in their hands, and how history eventually forced them to step down from the throne.